conventional loans. Let's get into it. This is the first video on my types of home loans, and the first one we are doing is the most common, which is conventional loans. First thing I am going to discuss about conventional loans is eligibility criteria. So the minimum credit score that you need to get conventional financing is 620. Now we're going to talk about DTI ratios. For those of you who don't know what DTI means debt to income ratio. This ratio is made up of how much of your monthly debts and your projected mortgage is included in that takes out of your monthly income. Once we do the math, we get a percentage. For conventional loans, your debt to income ratio max shouldn't be over 43%. And there is also conventional loan limits. So it depends on where you are, but majority, the conventional loan limit for a 1 unit, which is like, a single family residence, but it's considered 1 unit, is $766,550. Also, stable employment. You need to have stable employment and stable income in order to get a loan. Now let's talk about interest rates. Conventional loans, the interest rates are not just a one-size-fits-all. Your interest rates are dependent on a couple things. They're dependent on your credit score. They are dependent on your down payment amount. They are dependent on the loan amount. There is so much that go into interest rates, so it is not a one-size-fits-all. While we're on the topic of rate, let's talk about fixed rate versus adjustable rate. A fixed rate is exactly what it sounds like. Your mortgage interest rate is fixed, aka it does not change for the entire life of the loan, however long it is. An adjustable rate mortgage is exactly what it sounds like as well. Your interest rate is adjustable. Depending on what kind of adjustable rate mortgage you get, your lender should explain it to you and make sure that you fully understand, but most people don't get adjustable rate mortgages anymore. They are not as common. Let's talk about private mortgage insurance. So you need to pay PMI, which is private mortgage insurance, if you put less than 20% down. Do not fret, your mortgage insurance can be dropped off after you have a certain percent of equity in your loan. If you're out there right now and have a conventional loan and you don't know if you can get your PMI dropped off, make sure you reach out to your lender and ask them. Now, let's get to the best part, down payment requirements. So I hear this referred to a lot of the time as a first-time homeowner's loan. If you are a first-time home buyer, aka haven't had ownership interest in a property in the past 3 years, you can put 3% down. So 3% of your purchase price will be your down payment amount. If you have had ownership interest in a property within the last 3 years, you need to put 5% down. That is the minimum. You can put as much as you'd like down though, 20, 30. So a conventional loan is the most common because most of the time it has a little bit better pricing for interest rates. And like I had said earlier about the private mortgage insurance, you can drop it off after a certain amount of equities in your property, or you can put 20% down and you don't have mortgage insurance at all. That's the basics about conventional loans. And also, if you ever hear the term Freddie Mac and Fannie Mae, I can make an entire different video about those. Basically, we have to write our loans under the guidelines of either Freddie Mac or Fannie Mae. Those two are associated with conventional loans. I could totally make another video about this, but this is just a really quick crash course on conventional loans. If you do not qualify for a conventional loan, do not fret. There are a ton of different loan products out there that you could possibly qualify for. And of course, like always, if you guys have any questions, my DMs are open. You can reach out to me via phone, 708-577-8668.